In this video, we will be analyzing the earnings of Meta, one of the world's leading social media companies with about 4 billion users across all its platforms. Meta is trading on a stock market, and like any public company, it releases its quarterly and annual earnings. So in this video, we will look at Meta's financial statements to understand how Meta makes money, how much it makes from its different divisions, and what key parameters are used to evaluate its performance. So whenever Meta releases earnings, you will understand them like a pro. For starters, we learn from the earnings report that Meta makes money from two divisions. First, Meta is a parent company of a family of social media apps, some of which you probably use: Facebook, Instagram, Messenger, WhatsApp, and more recently Threads, which Meta launched to compete against X. But social media is not the only source of revenue for Meta. Meta also has been actively investing in virtual reality, augmented reality, and artificial intelligence, and selling AI-powered products such as Meta Quest glasses under its second division, Reality Labs. So on Meta's income statement under revenue, we will see money generated from two sources: family of apps and Reality Labs. Now let's look in more detail into how exactly Meta makes money in each of its divisions. For the family of apps, when we look at the statements in Meta's earnings report, we see that in the first quarter of 2024, Meta generated $36 billion in revenue from the family of apps, and most of it, $35.6 billion, came from advertising in those apps. Let's take a closer look at what parameters drive increase or decrease in advertising revenue for Meta. So when we see fluctuations in advertising revenue in Meta's earnings report, we understand what might have caused them. The main factor that drives advertising revenue for Meta is the number of people logging into the apps. The more people use Facebook, Instagram, and other apps, and the longer they stay, the more advertisements Meta can put in front of them. Hence, the more advertising revenue it can earn from advertisers. That's why in Meta's earnings report, we see numbers of monthly active people. What does the term monthly active people mean exactly? We find the answer in Meta's annual report. Monthly means that the person logs into one of Meta's apps at least once a month. Because the same person can be using multiple apps, Facebook, Instagram, Messenger, under multiple names and accounts, logging in from multiple devices, mobile, desktop, tablets. Meta tells us that they use complex algorithms and machine learning to match and link these multiple accounts across different apps as belonging to the same person. So monthly active people we see on earnings releases are actually unique individuals, even if they have multiple accounts across the apps, who log into at least one of Meta's apps at least once a month. On the chart below, we see that Meta has almost 4 billion of unique monthly active people on its apps globally. With the purpose of driving more advertising revenue, Meta wants not only more people logging into its apps, but also people logging in more frequently than once a month. So there is another measure that Meta uses: daily active people, who log into any of Meta's apps at least once a day from any device. And we see here on this chart that there are still over 3 billion unique people worldwide who log into Meta's apps daily. By the way, the word family here does not mean that Meta counts people who have families, but rather people who log into Meta's family of apps. However, it's worth noting that users in different parts of the world don't contribute equally to advertising revenue of Meta. If we take Facebook, for example, in North America, the average advertising revenue per user was $68.44 last year. By contrast, in Europe, it was only $23.14, and even less in Asia Pacific at $5.52. Here we see total advertising revenue for the fourth quarter split by geographic area, and we notice that US and Canada bring the largest portion of revenue to Meta, followed by Europe, then by Asia Pacific, and the rest of the world. I hope you're finding this video useful and informative. If so, please click like and subscribe to the channel to see more videos like this one. Going back to financial results, we see that advertising is not the only source of revenue from family of apps. There is also a line named Other Revenue that generated $380 million in the first quarter of 2024. What's that other revenue? We find the answer in Meta's annual report. Other revenue is the revenue from WhatsApp business platform. This is the platform that offers businesses different paid tools to communicate with their customers through WhatsApp. Now that we understand revenue coming from the family of apps, let's look at the Reality Labs division. We see on the financial statements that Reality Labs, as a newer division of Meta, is significantly smaller, but still brought $440 million in revenue to Meta in the first quarter of 2024. So in total, from two divisions, Family of Apps and Reality Labs, Meta made about $36.5 billion in sales in the first quarter of 2024. Now that we got the revenue picture clear, let's see what kind of major expenses a company like Meta has to deal with. On Meta's income statement, we see a line called Cost of Revenue, which for the first quarter was about $6.6 billion. As per Meta's annual report, cost of revenue includes expenses related to technical infrastructure such as data storage, servers, and related payroll of employees, as well as credit card fees on customers' payment transactions in the apps, plus the inventory costs of Reality Labs. Percentage-wise, we see on this chart that the cost of revenue represented 18% of Meta's sales in the first quarter. We also see here that research and development is another major expense for Meta, on which the company spends 27% of its revenue, and this includes innovating the apps and developing new products in Reality Labs. Another major expense is marketing, on which Meta spends 7% of its revenue to attract users to its platforms and promote its services and products of Reality Labs. Now that we understand Meta's revenue and major expenses, how much profit did Meta make in the first quarter of 2024? On the income statement, we see that in the first quarter, Meta made $13.8 billion in operating profit and almost $12.4 billion in net income, resulting in the net operating margin, which is calculated by operating income divided by sales, of 38%, which means that 62% of Meta's sales goes to cover operating expenses. Also, we see here that earnings per share, calculated by dividing net income by the number of shares, have grown significantly in the first quarter of 2024 compared to the same quarter of the previous year. So Meta is profitable, but do both Meta's divisions, Family of Apps and Reality Labs, equally contribute to this profitability? Here we find the profit split by division, and we notice that while the Family of Apps is generating profit, the Reality Labs is currently losing money and negatively affecting the total profit of Meta. In Meta's annual report, we find an explanation to this difference in performance between the two divisions. For the Family of Apps, profits actually increased compared to last year, explained here by increase in advertising revenue and decrease in marketing costs. For Reality Labs, Meta explains the loss by increased payroll as Meta continues hiring technology talent to innovate in this division, coupled with a decrease in sales of Meta Quest glasses, which is not a good sign for the product. Now that we analyzed Meta's earnings, what's the conclusion? We see that the number of active users in apps is growing, and so is Meta's advertising revenue. That's a good sign, as advertising is the main source of revenue for Meta. As for the new Reality Labs division, it's losing the company money right now and taking away from Meta's total profit. But we can't call it a failure yet, as Meta clearly states in its annual report that Reality Labs is a long-term investment. It's too early to tell if Reality Labs will become profitable and how soon. For now, it remains to be a money drain for Meta, which negatively impacts Meta's net profit and earnings per share. Having said that, Meta has made the right move to diversify its sources of revenue to not entirely rely on advertising and at the same time try to get a strong foothold in AI through its investment in Reality Labs, as its many technology competitors are doing right now. This way, Meta is hoping to secure a leading position in the very promising AI space in the future. Overall, things look healthy for a growing, innovative, and profitable company such as Meta, and we'll keep a close watch on it going forward.